The 30-year mortgage rate in the United States climbed to 6.38% by late March. The 10-year Treasury bond yield jumped to 4.46% on March 27th, its highest level since July 2025. A Financial Times investigation reported that $580 million in short positions on oil had been placed roughly 15 minutes before Trump posted a statement on March 23rd, announcing a postponement of attacks on Iran, briefly sending oil prices lower. The report prompted calls for a formal investigation into potential insider trading. Gulf Cooperation Council sovereign wealth funds, which had been increasing their investments in American financial markets over the prior decade, are now diverting capital toward domestic defense and survival spending. Analysts at the Center for Strategic and International Studies noted separately that the war was disrupting global agriculture markets due to the Gulf region's role in fertilizer production. Gulf states account for roughly 45% of global sulfur supply, a key input in fertilizer manufacturing. Geopolitical analyst Marco Papic of BCA Research estimated in late March that the conflict had removed between 4.5 and 5 million barrels per day from global supply, amounting to roughly 5% of global output. He projected that figure would double by mid-April, representing the single largest loss of crude supply ever recorded. On the question of how long the Strait disruption can be absorbed before permanent economic damage sets in, oil industry executives and analysts have consistently pointed to mid-April as a threshold, beyond which supply disruptions are expected to significantly worsen and become harder to reverse, even if a settlement is reached. The U.S. Energy Information Administration projected in late March that crude oil prices could push retail gas prices approximately 7 cents per gallon higher in the second quarter of 2026, before returning toward $3 by year's end, contingent on conditions in the Strait improving. As of April 6th, those conditions had not improved. The EIA also noted that Trump had ordered the release of 172 million barrels from the Strategic Petroleum Reserve in early March, an action that would take approximately 120 days to fully deliver to the market. The International Energy Agency coordinated an emergency release that analysts at Morgan Stanley estimated at roughly 2 million barrels per day. The U.S. Energy Secretary indicated the actual figure could reach 3 million barrels per day, though the precise release rate remained unclear at the time of reporting. South Korea, which imports approximately 75% of its oil through the Strait, has been identified by CSIS analysts as the non-combatant country most severely affected by the conflict 1 month in, facing both economic pressure and domestic political consequences. Japan's prime minister publicly warned that a sustained Strait closure could exhaust the country's oil supply within roughly 8 to 9 months. China, which receives approximately a third of its oil via the Strait, had built up a reserve of roughly 1 billion barrels, providing a buffer measured in months rather than indefinitely. As of April 6th, the immediate question before both parties is whether the 45-day ceasefire framework proposed by mediators can be accepted in the hours before Trump's stated deadline expires. The broader question, which analysts have been addressing throughout the conflict, is whether the structural conditions of the war allow for a durable settlement at all. Iran has identified its enriched uranium stockpile and its leverage over the Strait as its primary negotiating assets, and has stated it will not relinquish either in exchange for a temporary pause. The United States has stated that both issues must be addressed as preconditions. The gap between these positions, as of today, has not been closed. This is the video for today. If you want my ebook, the link is in the description. See you later.